Our business consultants are going to present you another financial model, which is Hostel Excel financial model. This model will help the hostel business owners and the relevant industry owners to evaluate, forecast, and visualize their financial performance. Starting with the table of content, it includes the input sheet, revenue analysis, the financial statements, and the dashboard for the visual representation. Moving on to the input sheet, it includes the assumptions for the capital structure, the segmentation dependent on room types A, B, C, and D, and the revenue generated from each of these rooms. Input assumptions also includes the payroll assumptions, capex, and opex, as well as the payable and receivable assumptions. Moving on to the revenue analysis sheet, it includes the revenue generated from each room and the total revenue. Next, we have the depreciation and loan amortization schedule. It includes depreciation shows the reduction in the value of your assets for the next 5 years, and the loan amortization schedule shows the monthly interest and principal payments. Next, we have the profit and loss statement. It shows the monthly as well as the yearly profit and loss. It includes the total operating expenses, EBITDA, and the net income before and after taxes. Moving on to the startup summary, it shows the total funding required in the first year of the company. It also shows the graphical representation of utilization of fund, the total cost, and the total expenses versus total funding. Next, we have the cash flow statement, which shows the net cash flows from operating, investing, and financing activities. It also shows the working capital, the amount in account receivable and payable, and the change in these accounts. Moving on to the balance sheet, it shows the total assets and the equity and liabilities for the year ended. Moving on to the break-even analysis, it is the point at which the cost and income of your business are equal. The model shows the break-even with respect to the sales amount as well as the number of each break-even unit. Next, we have the project evaluation, which shows the value of your company at year zero. It shows the NPV IRR of the company, and it also includes the burn rate analysis and minimum investment required. Moving on to the sensitivity analysis, it shows the valuation of the company in the actual, optimistic, and pessimistic scenarios. In the last, we have the dashboard, which shows the most relevant financial graphical representation of the model and depicts the key financial metrics for the better understanding of the performance measures. This is the end of the video. Thanks for watching.